For me, it's always very interesting to exchange with other like-minded people, private investors, about investments and especially also about the topic asset allocation, like I did it about my asset allocation a few weeks ago on my channel. Today, Angelo is visiting me. Thank you for your visit.
Thank you for the invitation.
And so I think it's more than interesting to talk about your current asset allocation, especially also about the changes since this crash last March, since all the happenings, we all know about it and are still in this pandemic. And I think it was very tough on the one hand, but there were also a lot of opportunities and learnings. So yeah, what have been your learnings and what is your current asset allocation?
So we already did a video about my asset allocation, I think, was it 2 years ago or 1.5 years ago on your channel?
Yeah, some time ago, before the pandemic shit, yeah.
And a few things have shifted a little bit. So I'm still invested in the same asset classes. But I'm gonna tell you what happened. So last year, just like you, I was also able to take advantage of the crash, and I also made a video on my channel about it, about my top 3 investments for 2021, and I also talked about how they performed in 2020. So you can take a look if you want. By the way, my channel name is Peer-to-Peer Investing Europe, in case you don't know it yet.
I'll put it in the description.
Yeah,
for sure.
So right now, what my portfolio looks like is 60% is in ETFs, in low-cost broad ETFs, which consist of the Vanguard FTSE World. That's my main ETF investment, and also the MSCI World, which is the one I had previously purchased because I used to have a 2 ETF strategy consisting of the MSCI World and the emerging markets. And since the MSCI World already had some profits, I didn't want to realize those profits, and it's well diversified anyway, so I just added an additional ETF, which is the only one that I'm buying now. So I'm just buying the Vanguard All World ETF right now. And last year I was able to take advantage of the crash, which is why also this grew a little bit, and my target allocation for my ETFs is 60% of my portfolio. I feel good with this part, and I also treat it as a bit of a hedge against potential inflation or anything that could happen with the endless amounts of money printing. And yeah, so that's my stock ETF part. The second largest position in my portfolio is peer-to-peer lending with currently 15%. So it's a bit more than 15% right now, but that's kind of my target allocation is 15%.
Okay.
And that's partly because I added more to my ETFs over the last year, and they grew a bit in value. And also because I realized that cash flow is not as important for me, and it's also not optimal for me tax-wise. Since I'm 30 years old, I don't need this regular cash flow, which I have to tax right away. And so from a long-term perspective, I figured it probably made more sense for me to add more into the ETF bucket right now. Mm-hmm. That could change later on if I need more cash flow to live off. But right now I found this optimal. So my portfolio grew as a whole, which means the 15% is still a nice amount overall. So luckily we were both able to take advantage of the opportunities last year, and as a result, yeah, I can't complain. And then the next position with 15% is cash, and there it's mostly euros, but I also have a bit of US dollars as well for some extra diversification. And the last position is definitely the most risky one and the most speculative one, and that's 10% in cryptocurrencies, which mostly consist of Bitcoin and a little bit of Ethereum as well. And that grew a lot last year, where I was able to realize some gains finally after some hard 2008, after 2 hard years in 2018 and 2019. And so I was able to take out my initial investment, realize some profits, and so that's now at 10%, which I feel good with. And for me, it's like also an alternative to gold. Other people like gold and heavy metals, and for me, this is the speculative part of my portfolio. The most speculative part is 10%. I feel comfortable with that, even if that were to go to zero, or I took out my initial investment. And I still think there's a chance that, it might be worth more in the future, which, is why we're invested in the first place.
Okay, thank you very much. Very interesting, always this exchange, and I always also appreciate to exchange the thoughts behind that and have some further investment talks about this. And what was very interesting for me is in earlier talks when we had the coffee, we were also talking about this currency risk, which is in both of our minds always present, that there could happen something with the currencies. So you like this currency diversification, as I understand it as well. And you also think this is the reason why there is the asset allocation that important to think about that. Of course, everybody has a different approach, and what we are doing never is an investment recommendation. So everybody is responsible by himself, and we are only exchanging between like-minded people. But I think it's always interesting to learn from each other and to understand the thoughts behind. I will show both of our asset allocations in the screen so that you can compare easily. And you have a lower cash ratio.
Yeah.
So do you think this is enough to take opportunity if, for example, there are more mutations and you said, okay, the last year was, you can complain about the last year. Financially, maybe, of course, more would always be better, but it was so okay for you, yeah. But on the other hand, I think mentally it was very hard for all of us, and it's still hard for us, yeah. But we never know how it continues. So this cash ratio, you feel comfortable with, yeah?
Yeah, definitely. So for me, I'm trying to find the right balance between having enough cash to take care of opportunities, apart from the usual safety buffer and stuff, which everybody should have. Before you even start thinking about investing, please put aside 3 months of living expenses at least, and then just to feel more relaxed also about your investments in general.
Sure.
Okay, and it's enough. It's like so with 15%, I feel like it's a good balance. And I think it's enough to take advantage of opportunities while still having some protection in case we do see some higher inflation or something. Which is also why, just like you, I like to have most of my money invested and not just sitting around on a bank account. I wouldn't feel comfortable having 50% or all of my money on just sitting in euros on a bank account, on one bank account even, or whatever. Because like, one thing we know for sure is inflation exists and it's gonna be worth less every year after year. But then we have things we don't know. Are we gonna see hyperinflation at some point? Are we gonna see higher inflation? Even if it's just 5 or 6%, then after a couple of years, your money is worth half of what it used to be before. And we do already see, I think, an asset price inflation since a couple of years. Like we don't see it in the consumer price index in the supermarket, but we do see it in assets, in real estate, in a lot of other things.
So to recap on that, to summarize it, maybe my introduction to this question was not perfect in the English version right now, because I tried to do the same as I did it in the German version, but I wasn't sure that I get you on this point again. But to put it in a nutshell, what you're saying right now, and I totally agree on that, is that the cash ratio is on the one hand important, and everybody has to make his own decision, what he feels comfortable with and what is his approach on that. But on the other hand, there is this losing money for sure, and also that there is a risk on the currency as well, on the cash. If it is the bank, you never know what happens to the bank account or to the bank that is behind, or if it is just simply to the currency by itself. So the reason, or what we have to say is, it's very interesting for me when people, also friends in the community and so on, are asking me, Bernhard, isn't this really risky? Maybe you have the same questions. You are doing this in ETF in your case, in my case in single stocks. We already made the video about this, because you are an ETF fan, I'm the stock guy. But anyway, everybody has its different approach, and it's not black and white, but I think it's very important to say our opinion that it's much more risky to do nothing, only have it on a bank account, than to think about it, to learn by yourself, to educate yourself, and then decide to have a well-thought asset allocation on different assets, to take advantage of different opportunities and also keep your money safe and diversified.
Like in the end anyway, it's an individual decision. You have to feel comfortable with your investment, with how you allocate your money. If you sleep best with having all of your cash in your bank account, that's your decision. Just know what you might be giving up. Like you're losing to inflation, but it's an individual decision. So
exactly. Maybe you are right. We don't know.
Maybe there's a huge crash and then you can buy on the cheap. So that
we never know. So, but for me, still this statement, I also saw it in the Twino office, and I don't know why, but I really like this statement. The biggest risk is to take no risk. People who are following my channel might know this video 2 years or 3 years ago on my channel, where there's a background of the video. The biggest risk is to take no risk, and this is still my opinion. Okay, and then you have this 10% in cryptocurrency, and I mean we are very similar, I think, on the equity ratio. You are with ETF, I'm with the single stocks. We can also recap on that maybe, but first I want to go to this kind of cryptocurrency topic, because I'm only 1% in cryptocurrency, because I think it's very volatile, and for me it's also this worst case scenario, like it's a digital gold. Do you see it also like a digital gold?
Yeah, that's my primary reason for owning them. Is I don't like like how difficult it is to actually own gold. Like either I would have to buy it physically, then I would have to hide it somewhere, keep it safe, and this whole thing. Then there's a lot of spreads as well when you buy and sell physical, so you pay a lot of extra fees for that. And then if you instead want to buy some gold or heavy metals in general, in Europe you can only buy them via ETCs, not ETFs. So ETCs are exchange traded commodities, which are just like certificates basically. That you own that part of the gold, and I wouldn't feel safe with that. Last year I speculated with that a little bit with a small amount, but then again I realized, okay, I hate looking at charts. I just sold it again.
Okay.
I made a little bit of profit, but it's okay. No, it's enough. I already have my speculative investments in cryptocurrencies. The 10% there, that's my play money basically, and luckily I was able to realize some profits last year, which was great. And so yeah, that's in my opinion that's fills the role of gold for me, like a bit of like a worst case scenario. Like of course nobody knows what could happen there, but even if that were to go to zero, it would be fine for me. I already took out my initial investment, and yeah, just gold is for me it's not very practical.
Okay.
And I just feel more comfortable with this. We also have to say again, like okay, I'm 30 years old, like you're a little bit older than me, not by much, but still maybe.
Yeah.
Maybe
Very
that's
interesting.
also a bit of a different mindset on that. It's possible.
Yeah, very interesting. Now I have the next topic for recap. Maybe first to compare this already, the thoughts behind. So for you, digital gold, cryptocurrency, difference
It's
between
mostly,
us.
by the way, it's mostly Bitcoin and a little bit of Ethereum. So I'm not speculating in really small things because I made horrible experience with that in 2017. That's enough for me.
I get you. In my case, I diversified it on this 1% cryptocurrency and 2% on gold. But as you said, totally agree on this problem with the gold physically. I think it's very complicated. So, I don't want to have this at home. I decided to make the solution like that I bought this Börse Stuttgart, so Stuttgart Stock Exchange, you would translate in English, gold 2 certificate, ETC, it is an ETC as well.
I think it's called UVAX Gold or something.
UVAX Gold, in German it's called Börse Stuttgart UVAX Gold 2, so you have to translate it yourself in English, okay? Anyway, you will find this product if you're interested on your own risk. But what I like on this product is that it's pledged physically by gold, and it is by the stock exchange, so I think there is a lot of control on this. And I mean, you never know where you can trust. There was a Wirecard and whatever. And
in Germany, you still have a certain.
But I think, so I have some trust on that for sure, yeah. And you can also let it deliver in case you want to have it delivered physically. And this is a product that I really like, but I can easily buy it on the stock exchange and so on, and also sell it there. And for me, this is also a long-term investment just to have this in the asset allocation as if there is a crisis, that you have this protection of a different currency like gold, which in the history was very stable
and it's also not correlated to stocks and to things.
Exactly.
That's also why so for me the cryptos kind of fill that role. That's not correlated to stocks and stuff.
Yeah.
Even though everything crashed in March last year, which was very interesting to see, still usually you don't have that much of a correlation. But if people run out of money, they're afraid for their life or whatever, people will sell pretty much anything they can in that moment because they need cash, which is the most like in that situation. That's what you need the most for your expenses. But
if there is a lot of blood on the street, there are a lot of opportunities, and this is the moment when, for the bigger picture, if you are able also mentally, and for sure you never know, but this is maybe the moment you should really buy. This is what we have done last March. I started maybe too early because I started already at the beginning of March.
You're never gonna reach.
And a lot of people told me never catch the falling knife. Yes, but on the other hand, I think you never will buy exactly on the dip. Yeah, so
a lot of people
are not in it down, and they are still waiting right now. Yeah, and I think now it's too late. Yeah, because now I'm not really. I mean, I do some stock picking, but in general, I try to keep my cash ratio, which is a little bit different on both of our sides. But I think to recap also on this topic of the taxes, you're a guy that is really focusing on taxes a lot, yeah.
No,
or when we are talking, you're always talking about no, this is more tax efficient and so on. So I'm not so much focusing on that, yeah. And we also have this different approach that you say you are like more focusing on the compounding and tax efficiency. Whereas I like the strategy that I have a cash flow, but it's also different life situation for sure, because I already live some kind of this financially freedom life style where I don't need to do a job. I mean, of course, we are always working, and I have these 2 companies and 2 events and so on. But still, this is already, cash flow is much more important for me, to put it in a nutshell. Yeah, because I also want to be able to live in this. My construction already in my asset allocation should be like, I could also, if tomorrow I want to go somewhere and want to live there and don't want to work, if I don't spend a lot of money and I live so like my simple life, it would be possible. And so this is something which also is, I think, a different approach on our asset allocation. And it's very interesting thoughts, I think, that you can see that there's a lot of things you should have in mind, and learnings and homework you should do before you decide your asset allocation. But to put it in a nutshell, I think we can say asset allocation, a very interesting topic. Everybody has to make his own decisions on that and his own approach. And now I'm looking forward further exchange about this in the comments, further investment talks in the comments. And one last statement, something you want to say?
Yeah, in case you're interested in all of my investments, ETFs, peer-to-peer lending, even cryptos, and where I bought those, I think Bernhard is going to put a link down below where you can see an entire list of everything that I'm invested in and the links to the brokerages that I like to use. And yeah, I think that's pretty much it. And actually, we're going to make a video on my channel about Bernhard's asset allocation and what happened maybe last year, something that he's going to tell us. I think a lot of you are going to be interested in it as well.
Super. Looking forward to that. And thank you. Thank you for your time. And thank you for watching. Bye-bye.
Bye.